Learn these money rules only 1% of people know. How do people make so much money? Majority of people have mediocre financial situations, but if you look closely, you'll see that everyone who has made over $1 million has adhered to these 4 principles. The best year for billionaires in the 21st century was definitely 2021. More money than ever has been made by them. The top 10 richest people in the world saw an increase in wealth of $402 billion. According to Bloomberg, the 10 richest people in the world are all worth more than $100 billion. Just 2 persons, Jeff Bezos and Bill Gates, had a net worth of over $1 billion 2 years ago in 2019. It appears that the past 2 years weren't as horrible as we thought they would be. They can even be referred to as the heyday of the stock market. In the near future, we might never go through that. For instance, the price of Tesla shares increased by more than 1,200% from January 2020 to its peak in November 2021. Elon Musk topped the Forbes list for this reason with almost $200 billion. Net worth of $237 billion is not a joke. He can purchase entire nations. His net worth eventually surpassed the $300 billion threshold, just shy of the $140 billion he added in 2020. He increased his net worth by $121 billion in 2021. If he keeps expanding at this rate, we could see headlines like Elon Musk is the first trillionaire or Elon Musk, the individual who crossed the $1 trillion net worth in the next 5 to 10 years. He will even be envious of Saudi kings. Although it could appear that only tech millionaires have amassed such wealth, this is wrong. Consider Bernard Arnault. He works in the clothing industry. With a net worth of $176 billion, he has yet led the Forbes billionaire list. His LVMH group owns almost every premium brand you can imagine. Given that we are discussing sums that the majority of people will never reach, it can often be challenging to make sense of anything. Even if you earn $1 million annually, which would rank you among the wealthiest earners, it would take you 1,000 years to reach the $1 billion threshold. So let's look at how many people exceeded the $1 million threshold. In 2021, there were a record 14.6 million Americans who had investable assets of $1 million or more, up from 13.3 million in 2020. If you pause to think about it, there is a lot of money to be made, particularly in the US, where the economy is worth over $20 trillion. So how do some people earn millions of dollars when the vast majority of people are in financial difficulty? How do people make so much money when more than 60% of people are unable to save up $1,000 emergency fund? Of course, there isn't a straightforward answer to that, but if you look closely, you'll see that everyone who has made over $1 million has adhered to these 4 principles. They are so basic that it is simple to overlook them. That's probably why the majority of people have mediocre financial situations. Give this video a thumbs up if you're ready, and then let's start with Number 1. The 20% rule. Look at any organization. Even though a corporation may have many items, the great bulk of their sales or earnings originate from a small number of those products. For instance, Apple, which appears to be the most successful firm in the world, offers a wide range of goods and services. However, the iPhone accounts for approximately half of its sales, while the other 2 items account for 30% of its revenue, and the remaining products and services barely make up 10% to 20%. Check out the athletes. It blows your mind to learn that they get paid millions of dollars to play just one game. You believe you should have pursued a career in athletics? The truth is that despite the fact that there are millions of athletes worldwide, just the top 1% of them make 80% of the revenue generated by this sector. Everyone else receives the final 20%, and the great majority cannot even support themselves through sports. The same is true with YouTube. The top 1% of YouTubers earn millions of dollars, while the remaining 99% struggle to make ends meet. Working at a McDonald's frequently offers a higher rate of return than creating videos for YouTube. Only 2% of YouTube videos receive 1,000 or more views, while the majority of videos receive fewer than 50 views. 0.3% of videos receive at least 500,000 views. This means that the chances of you becoming famous on YouTube aren't very high. Believe me, you won't make a lot of money even if you end up with 500,000 views. According to the 80-20 rule or the 20% rule, only 20% of causes result in 80% of the effects. 20% of drivers cause 80% of all accidents on the road. 20% of workers produce 80% of the outcomes, and 20% of drinkers consume 80% of the alcohol. Even while the ratio isn't always exactly 80-20, it's close to it. 20% of the population controls 80% of the money since they are the ones that find solutions to most issues. You make 80% of your money from 20% of the work you do. The point is that if you quit doing all of these things that don't significantly improve your life, you'll have more time to concentrate on the things that will increase your yield and money. You now understand why some people needed 20 or 30 years to reach their first $1 billion, but only 1 or 2 years to reach their second. Number 2. When speculation appears to be easy, it is most dangerous. The past 2 years have been among the best ever for cryptocurrency. People who traded cryptocurrencies won enormous sums of money, but a record $14 billion was also lost to scammers. Just consider the amount of money lost by people. It has happened before. The same story was repeated in 2017. Not to say that cryptocurrencies or NFTs are frauds, but since they are such new and unstable assets, they are rife with fraud. YouTube is flooded with advertisements promising you the chance to get rich by purchasing their cryptocurrency, using their program, or simply listening to what they have to say. It's as simple as that, but that's how people typically lose their meager savings. Therefore, be cautious anytime it seems extremely simple to profit from speculation, because you'll probably fall into a trap from which it will be difficult to escape. Number 3. Refrain from emotional response. If you've ever made stock market investments, you are aware of how profoundly emotions may influence decisions. In particular, when everything is increasing, keeping a side perspective on things is difficult. But the past 6 months have shown that just because things are improving, it doesn't always imply they will continue to do so. Despite strong inflation, it is better to hold cash right now than stocks or cryptocurrencies, because both sectors were devastated when the Fed raised interest rates. In previous videos, we have discussed why the markets have collapsed despite the fact that inflation is at its greatest point in 4 decades. It's always a good idea to conduct your research before investing, as it's far simpler to lose money than it is to get it. Number 4. Be independent. Although it may not seem like a financial principle, this is most likely the most significant skill that every wealthy person maintains in mind. No one will care about you as much as you care about yourself. If you are dependent on others for your money, thus you won't get very far. If you have a job, your employers are in charge of your financial future. Nothing problematic about that. Your manager won't put in much effort to turn you into a millionaire. Your ultimate goal in life should be ownership, working to create something that will last and not disappear into the hands of others. When it belongs to you, you are more inspired and inventive to construct it. You cannot rely on others for your own achievement in a world where everyone acts in their own self-interest and puts their own interests first. Thank you for watching, and we'll see you in the next one.